What's up, everybody? This is Lance. I am the host of the Health and Real Estate Podcast. And today I have two guests with me. First is Maya Brandis. She is our lead buyer agent. So she'll be the one showing you all the homes. And secondly, we have Kristina Hernandez, who is our trusted and preferred lender. And she is going to go over some really awesome loan programs that are here available in California. So I'll just pass it off to you. Actually, before I pass it off to you, Maya, sorry, I wanted to read these really cool stats that I have up, which are some benefits of home ownership. So these really stuck out to me. And this first one, when I read this is what got me into real estate. So 80% of millionaires are made through owning real estate. And that leads us right to the next stat below it is the net worth of a homeowner is 43 times more than of a renter. The average renter has a net worth of $10,000 and the average homeowner has a net worth of $430,000. So that's how you build net worth and equity through owning a home. Now I want to pass it off to our buying agent specialist, Maya Brandis.
Thank you, Lance, and hi, everyone. I'm really excited to be here, and I'm excited to help you all get into your dream homes. And the first step to getting into a home is getting pre-approved for a loan. And there's so many different types of loan options. And so we brought Christina over so she can tell you about some of those options that are available. So, Christina, the floor is yours.
Thank you, Maya. Thank you, Lance. Yeah, let me go ahead and start sharing my screen now, and we will start getting into some of those great programs that are available for first-time home buyers. All right, so a couple of the programs that I will be going over will be the CalHFA programs, and the popular one right now in the news and everybody's talking about is the Dream for All. And then the other program I'll be talking about will be the Golden State programs that are available. A few other things that I'll be talking about will be application process, how to get qualified, credit tips and tricks, and some of the current market opportunities. So let's dive right in. So a little bit about me. I've been doing lending for about 25 years now. Started at Washington Mutual back in the days, and have been doing lending ever since. Love what I do. I offer many types of loan programs that are out there: CalHFA, GSFA, conventional, FHA. Home equity lines of credit, all the way to mobile homes inside parks. So we do an array of programs, that's for sure. As far as the CalHFA programs, let's talk about CalHFA. They are a California Housing Finance Agency, and they help with down payment assistance programs and first-time home buyers. They have been in business longer than 45 years. They're operated out of Sacramento, and they get funds from the state and through other agencies and partners in regards to being able to help with the down payment assistance funds. So we utilize their programs a lot. There's some really great programs. So let's dive into those programs right away. The first program that is not a lottery, it's available right now to people, so you don't have to be on a wait list or in a lottery. It is the minimum down payment for the homes. So you can do either FHA or conventional down payment assistance. It will lend you 3% if doing a conventional loan, or it will lend you 3.5% if doing an FHA loan. It's called the My Home Assistance Program. In order to qualify for this down payment, you must be a first-time home buyer, and it can be used for closing costs and or down payment. It cannot be used for debt payoff. It will be recorded in a second position, so it is a second loan, and there is no payments due on this second loan. It's deferred for up to 30 years or until you go to sell or refinance. That's when it would need to be paid back. No payments are due, no prepayment penalty, and the interest on the My Home is 1% simple interest. So you're going to have two loans, a first and a second, and that second is considered to be like a silent second. You are welcome to pay extra payments to it at any time. There's no equity appreciation share, so it's something that can be paid off at any time. That one, again, no lottery, no equity share, and it's available today. The next program that's available is the big one that's out there, the Dream for All. The Dream for All is 20% down that they will lend you at 0% interest, and it is deferred with no monthly payments due. It is required to be paid back when you go to sell or refinance the house. That is when that 20% needs to be paid back. It also will have what's called equity share appreciation that needs to be paid back. So that is 20% of the equity share would need to be paid back to CalHFA if you utilize this program. So let me give you an example. Let's say you buy your house for $400,000 and 2 years later you're selling it for $500,000. You have $100,000 in equity. So that means you'll have to pay back the original 20% down that you borrowed, plus you'll have to share 20% of that $100,000. So $20,000 would go to CalHFA, which is the equity share portion, and you would get to keep the other 80% or $80,000. So that is the Dream for All. In order to be qualified for the Dream for All, you have to be a first-time home buyer. This program can be used for closing costs and down payment, so we can split up some of this down payment and use, for example, 16.5% of it for the down payment and use the other 3.5% for closing costs. So it can be used for both. Again, it cannot be used for debt payoff, and it will be recorded in second position. You will not be able to make additional payments on this second loan. Should you start making payments to this second loan, that is when the equity share portion would then be initiated, and they would be thinking that you're going to try to pay that off. So it will, spark a repayment for that. On the Dream for All, it is a lottery system. So that lottery will be closing in the middle of March. So it's very important to get your applications in now ahead of time so that way we can get you into that portal before it closes. And then CalHFA will randomly be doing a drawing to call out those voucher winnings and notify you by email that you have been selected. Once selected, you will have 90 days to find a property. At the last 28, 29 days of that 90 days, if you have not found a property by then, you can request a one-time 90-day extension through the portal. So essentially, that's giving you 180 days to secure a property, and we need to be able to reserve the interest rate lock and the funds on the property. So that means you need to be in contract before that expiration date in order to use these funds, or they will go to the next person that's on the waiting list. The next program that CalHFA offers is the ZIP program. The ZIP program can be used towards closing costs. And what it is a third loan with 0 interest, which is why it's called the ZIP. There's no interest on that third loan. So we can pair that third loan with the My Home down payment assistance and give you help with the down payment and give you help with the closing cost. It can only be used for closing cost. It can't be used for debt payoff. It won't be used towards a down. We'll use the My Home for that. And it's, again, 0% interest, and it would be deferred, no monthly payments due until you go to sell or refinance the home. So this program is CalHFA, which stands for California Housing Finance Agency. Don't get it confused with an FHA loan. FHA is totally different from CalHFA. So a lot of times people confuse those and think that they're just an FHA loan, and that is not the case. We can use conventional financing with CalHFA loans. In fact, the dream for all is a conventional 30-year fixed loan. So that is the CalHFA programs that are currently available. Next, I'd like to talk about the Golden State programs. So the Golden State Finance Authority is another housing agency that is in California. They get funds as well to help with things like down payment, California Recover, things like when your house burns down, they have programs for that and refinancing that type of loan. So Golden State would be used, let's say if you did have some ownership in a house a year ago. So you're not considered a first-time home buyer with CalHFA, so instead we would use a Golden State Finance program. These programs offer down payments in the form of a second loan. There is a monthly payment due on the second loan with the Golden State. It's amortized over 15 years, and it's principal and interest, so that second loan will get paid off after 15 years. The interest rate on your second loan is the same as what it is on the first. So you're basically just splitting up the two loans. Instead of 100% financing, we're splitting it up into two separate loans is what we're doing. In regards to these types of programs, Golden State requires a minimum score of 640 for all of their programs. The one that I like is called the Select. So the Select will give a portion of it that is a grant and forgivable immediately if you are in a certain line of work. Medical or healthcare workers, peace officers, if you're a member of the CalSTRS, so you work for the university or a California state teacher, those Golden State programs offer a certain portion of it to be a loan and a certain portion of it to be a grant and gifted. So some of it can be forgiven immediately. So some people opt to do this Golden State program to be able to have some of it as a grant and a gift and not have to pay it back. They do allow up to 1 to 4 units. The borrower must occupy as a primary residence, and you can own up to a total of 5 homes and still get help with the down using this. It's just you have to occupy this new property that you're going to be buying. So it has to make sense why you're buying this new property. Income limits. There is essentially no income limit on this as far as FHA. FHA has no income limits. Conventional has income limits, but they offer 2 different interest rates if you are over the income limit. So it doesn't stop you from getting this program if your income is over one of their limits. It's just a different rate structure is all. Manufactured homes are allowed. Condos are allowed. PUDs are allowed, which is a planned unit development. For the Platinum program, it's a 640 minimum credit score. And then for the Golden Opportunities program, they go down to 620. So they're just called different names, and I would be the one that will help you to put you into which Golden State program is best for you, whether it be the Platinum or whether it be the Select or whether it be the Golden Opportunities. That's something that I will help with. In regards for home buyer education is not required for the GSFA program. It is required for CalHFA's programs. So just a little difference between the two. Again, no first-time home buyer. You don't have to have a first-time home buyer requirement to be able to utilize this program. What else is important? See, 620 we can do. I've already talked about that. And again, no prepayment penalty on this program, and we can go both FHA or conventional using the Golden State program. So both FHA and conventional loans are able to be used with this program. As far as getting pre-approved, what's needed to get pre-approved is very simple. 1 month of pay stubs, W-2s for 2024, 2025. We get your driver's license or state ID, so that way we make sure to have your name be accurate as it's showing on your ID and not using any nicknames for the loan documents. 1 month of bank statements. If you're self-employed, then we would collect 2 years of federal tax returns. And for other incomes, such as Social Security, pension, foster income, we would just need those types of award letters to be able to utilize and add that type of income. And for the pre-approval, we only do a soft credit pull. So there's no hard inquiry. It's not even going to show up on your credit report. And that enables us to be able to calculate your debt to income ratio and let you know what your buying power is using one of those down payment assistance programs. So with the home buying process, the first step is to get pre-approved. Once you know what your buying power is, then we go ahead and have you select that agent, unless you already have that agent in mind who perhaps maybe referred you to the lender. You're out looking at homes, and that's when then you're going to submit and make your offer. You're going to get an accepted offer. And then upon the accepted offer, we're going to start processing your loan. We're going to work on all of the final approval, get that loan processed, appraisal done. Contingency periods will then get checked off, which is your inspections, your loan approval, your appraisal, your insurance. Those are all contingency periods. We have a set time frame that we have to abide by on the contract to get those items taken care of and finalized. And then once we do that, then we prepare your final closing documents and send them to the title company. So that way you can then sign with the notary on your final loan documents. After you sign and we get the funding package back, we fund the loan, and then we release the wire, and the title company gets it to release it to record at the county recorder's office. That is when it is on public record that you are a homeowner and own that home, and we close escrow that day. And that's when Lance and Myra get to give you the keys to your new home. So that is the home buying process. Credit now. For credit, as far as breaking down the credit scores, 35% of the credit is based on your payment history. Another 30% is based on amounts owed. So when I have somebody come to me and ask, how can I bring my credit score up? I'm going to ask them if they owe any credit debt on their credit cards. If they tell me yes, then by paying that credit down on what they owe, that will immediately help them with getting those scores up. And it's revolving credit that helps the most. So paying off a car loan, which is an installment loan, it's like closing an account because it's no longer going to have anything to report. Unlike a revolving credit card, it's going to continue to report with an available balance to borrow, making your available balance on your credit profile greater, which then opens up that score to a higher score. So we have lots of ways to help people to improve their score. And if their score is, a certain amount of points away, we have the ability to tell them, pay down target by $200. Your score will move up 25 points. Be removed as an authorized user. Your score will move up 25 points. So we have tools to tell people exactly what to do based on their credit report. By them getting pre-approved for us, if they're not ready to buy today, we can get them into a position to be able to be ready to buy tomorrow. As long as they follow our tips to the T, then they will see those results. As far as building credit, so payment history is very important. If you have late payments, that will affect the score, and we can't fix late payments. Late payments take seasoning, which means 12 months of seasoning from that last late is what it will take. So paying down cards is one thing, but late credit payments is another, where only time will help with that. Disputing things. You can dispute things, but then we have to make sure that that dispute gets resolved. When we pull that credit report, we're looking for dispute comments to say dispute resolved. So that's important. And then making making on-time payments, we already touched on. Using maximum of 30% available. So we talked a little bit about that. That's your outstanding credit limit. So let's say your credit limit on your Target card is 1,000 and you owe 900. You're pretty much maxed out, so your score is going to be low. But if you can get that card under 30% usage, 30% of that balance, then your score will shoot right up. So it's important to try to stay under 30% owed on your credit cards. Different types of accounts. So again, installment account is one type of account, revolving account is another, lease is another. Those are different types of accounts. So revolving is the one that's going to really help boost your scores. So if you're sitting there with no revolving credit cards, I would recommend getting what's called a secured credit card. And you can get them online or you can get them at your bank too. A secured credit card is where you take $300 of your own money, you give it to the company, they hold that as collateral against that credit card. So you're essentially using your own funds for that credit card and they're reporting it to the credit bureau. So you're getting a benefit of using your own money and establishing credit for yourself. So that is one way that you can help boost your score as well. The other thing you could do is you could add yourself to somebody else's credit as an authorized user. So sometimes that will boost the scores right away as well. Limit your credit inquiries. So when you go buy a car, for example, they shoot it over to multiple different companies to see who's going to give you the best rates. Each one of those is an inquiry. So if you can help it, you can actually let them know, hey, I only want you to send it to these 2 credit unions. So that way going in, you be the one to tell them what to do as far as credit inquiries. And they have the ability to run it through just the people that you want it to go through. So a lot of people don't know that when they're out there buying cars that they can direct traffic with their credit. And now let's talk about some of the current market opportunities in today's current market. So right now we are talking about closing costs. It's part of every home loan that you do. There's title, escrow, appraisal, recording, notary. Those are called closing costs. Those closing costs right now, we are seeing some seller credits when the time is right. So if there's a home that's been on the market for, let's just say, 20 days, they don't have any offers on it, then you can ask for a seller credit. That is something that may be considered, depending on how much is owed on the home, as long as they're not in a short sale environment on that house, then that would be something where you could talk to your agent and say, hey, do you think that they would consider a seller credit towards the closing costs? So that is something your agent will recommend and talk to you about before going in. If it's a house that just came out on the market, multiple offers are on it, most likely you're not going to want to get closing costs from the seller. You're going to want to have a strong offer. So perhaps instead of getting it from the seller, maybe we can borrow it from your 401k company. A lot of people don't know that we can borrow against the 401k. You're borrowing against your own money and you're paying yourself back. So that's another tool that we can utilize to help pay your closing costs. Otherwise, there's programs out there such as the ZIP program that we could try to also use and pay some closing costs. Next is rate buydowns. The seller must pay for the rate buydowns when we're doing the rate buydowns. So you would have to ask for a seller credit if you're interested in buying that rate down. So something, again, we will talk with the realtor, talk to your lender and see if that is an option. Sometimes that will help you to get your payment down where you want it to be on a specific priced home that you're looking at. So definitely something to do. Repairs and home improvements. So things like broken windows, things like double strapping the water heater, things like electrical outlets that don't have face plates, those are things that are going to be called for on the appraisals because they are health and safety issues, things that are required. Some things may get called that are on an FHA appraisal that are not on a conventional appraisal. So it just depends on the type of property that you're offering on. And again, your lender and your realtor are going to be able to help educate you on what repairs will need to be done on the home to pass the appraisal inspection. So prices are negotiable. Currently in the market today, prices are negotiable. Now, a couple years, prices were not negotiable. It was over market value. They were going for higher than list price. People were having to pay $50,000 over, sometimes higher in certain markets. We are not in that market right now. We are in a market where, yes, some prices are higher than the list price, but most of the time it's because it was listed low to try to bring in some buyers. And then you've got multiple buyers and you're basically at like a bidding war on that particular property because it was priced under market value. So people are trying to get a good deal. So again, prices are currently negotiable in our current markets in most areas. There is limited inventory, so it's not something where I'm seeing people are getting under list price or under market value. So we're not seeing people see a home for $450 and make an offer for $425 and get an accepted offer. No, we're not seeing that. We're seeing a $450 listing and we're seeing people offer $450 and they're getting it for $450. So that's kind of where we're at today with the prices. Inspections. Today, inspections are not being waived, which means it's still okay to ask for inspections on that contract when you're submitting that offer. Now, again, a couple years ago, people were having to submit offers without any inspections in order to win the property because rates were so low and we were flooded with buyers on the market. So if you wanted to get inspections, sure, you could get them, but it wasn't something that you could cancel the contract for because you had to submit that offer saying we'll accept it as is without any inspections. Today, it's not like that. Today, people are getting inspections and they're talking about the inspections and repairs that are needed on those inspections. So I just had somebody get a seller credit of $19,500 because of the inspections, and that's perfectly fine. We can get those credits and use those towards closing costs in lieu of repairs. So something to think about in our current market, why today is an opportunity and a good opportunity to buy. So why is now the time? The top reasons, so we can start saving money. Saving money by having the property taxes and interest deducted on your tax returns. So it puts you in a different tax bracket. So that's going to be saving you money. Building equity. So that's what Lance was talking about earlier about your wealth and building your wealth and your generational wealth. By building equity in your home, that's going to give you more value. People make money in real estate by the way that their house appreciates in value. They make more money in real estate a lot of times versus the stock market because of how quick our equity increases in California. There's a lot of demand in California to live in California and buy in California, which why there's not a lot of homes out there sometimes at certain times because it's a highly desired state to live in. There's the interest deduction. So you get to deduct your interest, you get to deduct your property taxes, and those deductions sometimes can be greater than your standard deduction. And so sometimes people will come to me because their CPA has told them, they keep owing taxes at tax time because they have no write-offs. So they need to buy a house in order to have these deductions and put them in a lower tax bracket. So, next is investing in your future. This is a long term 30-year investment that you're investing in when you're purchasing a home. And then you're making updates and upgrading it as you go along, reinvesting in that property, which is going to help build your equity. So, again, you're investing in the future of your home. First-time home buyer programs. There are so many that are out there right now, power for people, because it gives such a big amount. 20% is huge. So it changes somebody qualifying for, instead of a $400,000 home, it allows them to qualify for a $500,000 home. So it actually makes it available, to find a house located in California using this Dream for All. So stability and sense of community. When someone owns a home in the neighborhood, they take better care of it. They care about what it looks like. When you're planting flowers out in the front yard and when you're painting your garage door, and then you start looking around the neighborhood, you see other people in your neighborhood start sprucing up their house too. It's that sense of community that they all feel, of wanting to make, their house look nice and clean. Um, Next is buying again. So there's the buy up with the equity. So when you earn equity in your home, people then use that equity to buy the next house. And so you're selling your first house. Maybe it was a 2-bedroom, 1-bath, and you bought it at 400,000, and now you've outgrown it. You need a 3-bedroom, 2-bath. Well, now you can take the equity that you've built in that house and use it for the down payment on the next house. So you're going to buy up again. So that's, another reason why now is important to just get your foot in the door as a first-time home buyer and to just, start owning somewhere. And it doesn't have to be your forever home. Know that most people buy at least 5 homes in their lifetime. So something to think about. Rising rents. I know every year I hear people tell me, Kristina, my rent is going up. My rent went up again. The cost of living went up. Every year landlords are allowed to bring the rent price up. And so stop doing that and allow your mortgage payment to stay the same for 30 years. And then another reason why now is the time to buy, because of the simplified loan process. It's such an easy process now to go through, where you can just supply the limited items that are needed. We run those programs for you, and you're able to start working with a realtor right away. So the simplified loan process allows so many more buyers now to become homeowners in such a quick amount of time. So it's easy to get pre-approved, and it's easy to learn the path that your credit is at and where you need to be, by just reaching out and having us help you, show you the way. So that concludes my information today that I wanted to share. This is my link right here. If you wanted to snap that, you'll be able to get into my portal and begin the process of generational wealth and becoming a homeowner. So please feel free to reach out to my phone number or my email address with any questions that you have. And Maya and Lance are also available, and they will be able to help assist you as well with any of those questions. So thank you so much.
Awesome. Thank you so much, Christina. A lot of those loan programs are very powerful in helping people get their foot in the door, like you said. And a lot of people, including a lot of agents, don't even know about these loan programs. So it's super, super cool. And if you're interested in buying a home this year or even next year, the best time to start preparing and planning is now. I would highly recommend reaching out to Christina and getting that pre-approval done, filling that out, because she doesn't do a hard credit pull, and she could tell you where you're at, where your buying power is at right now, and she could coach and counsel you to increase your credit and do things to help your buying power in the future. So it is super, that is the first step in home ownership and the home buying process is the pre-approval process. So I can't stress that enough. And I will leave everyone's information in the show notes. I'll leave everyone's email, phone number, and a direct link to apply right in the show notes. So with that said, thank you everybody, and let's get you in a home.